Hey everyone, Bill Constain, CEO of Freedom Wealth Services. Thanks for coming to the video today. This is part 3 of a part 5 series on our ebook, The Top 5 Secrets to Building Wealth, told by the top 25% in the United States. So here it is, just a review, and we will have the top 2 videos, video 1 and 2, on the first subjects. One is higher taxes are coming. Little history on taxes. Where do you think income taxes are going to be for your investments in the future? There's a little picture, and where do you think it's going to be? We started in 1913, started at 1%, high bracket 7%. Right now, the high bracket 39.6, but the average 58.24. Do you think taxes will be the same, lower, or higher in the future? That may impact how you save and invest your money. So that's going to be a video number 1. Video number 2, longevity must be considered. Number 1 fear for people who are retired or going to retire is outliving their money. So you have to be very careful. So secret number 3, and the title for this video is protection is greater than accumulation. So let's go through it together. I encourage you to read through the whole book, which is available on our site, which is in the description. The wealthy understand that it's not about experiencing the highest gains, but rather receiving a portion of those gains while protecting the amount of wealth they already have. Remember, the rules for accumulation are far different than the rules for distribution. If you're in your 50s or 60s, you know what I'm talking about. If you're in your 70s, you know what I'm talking about. If you're in your 80s and 90s, absolutely. But now, how about people that are even in their 20s, 30s, and 40s? The smart ones think about the future, not just accumulate, but how to protect that money along the way. So I'm going to show you a couple things that may have you scratch your head a little bit and give you that aha moment. Below is an example of putting $100,000 in 2 accounts. Don't worry, if you don't have 100,000, you can just visualize. You could, if you have 10,000 or $1,000. For those that have more than 100,000, this certainly applies to you. So as you can see in a moment, the S&P 500 will be the red line. You expose yourself to stock market volatility. And again, our focus is helping people preserve, build wealth without Wall Street. So wealth beyond Wall Street to outperform without all the risk. Okay, so while you receive some gains along the way, even double-digit returns, you also experience the losses. And we all remember, most of us remember 2008. To expose yourself to all of this risk, the reward should be very high. But as you will see, after 15 years, that $100,000 in the stock market, you really only receive an average of a little over 4%. And that was in a great marketplace. Okay, 140,000, $144, a 4% return. That's not including management fees, inflation, and the amount of taxes that we pay when you begin to distribute that money. And if we use a 1% management fee, which is very conservative, you can see what will happen here. So the green line is a wealth strategy. That's a proven wealth strategy that we've been employing with our clients. And that red line is going to be that S&P 500, which doesn't offer you the downside of the market. So here, that $100,000, you can see coming down. And the problem here is we always tell people buy low, sell high. But when you're older and you're starting to get towards retirement, people get nervous. And most people will sell low. And then as it's going higher, they'll start buying here. And then they'll start getting frantic again. But when you give people a zero floor, when we can tell them, listen, you're guaranteed that the market won't come down for you. So the stock market can come down, but you're contractually guaranteed to have a 0% as your lowest possibility. People like that. And then they can capture the upside. So if the market comes down, they don't feel it. So if you're on a vacation, on a cruise, hanging out with your family, and the market's down 20, 30%, and you know your floor is 0%, no problem. For those that don't have that protection, boy, it can be nerve-wracking, especially when you're trying to live on your assets and you're getting a distribution here and the market's down. Very, very challenging. So here, the inflation rate average is about 3%. It's even higher, which impacts this even greater. and the remainder for the amount of taxes you paid during distribution, you end up with a number more like 0% with this S&P, but you have all the headaches and you have all the risks, all the downside, vulnerability. And if you ask most people who invested their money between this timeline, that's the number they would likely give you. They probably made nothing. So the top 25% use a certain wealth accumulation vehicle that is linked to the stock market, but it isn't directly engaged into the stock market. This way, they're able to participate in some of the gains, and there are some strategies now, the newer versions, where we can participate in all of the return of the index. Sometimes we have what's called a participation rate that gives you even in excess of 100% of the index. It could be 110, 120, 130% of the index. So the numbers that I'm showing you here can be quite conservative when we start factoring in higher participation rates. But for the purpose of this illustration, we want to be very conservative as we stress test all of our methods. This is called a method. This method is called credited indexing. The wealthy agree to terms within this vehicle that they want to experience the gains of the market without suffering the downside losses. By doing so, they agree that they only receive up to a certain amount, typically an S&P 500, and you might receive up to, let's say, 12%. So if the S&P credits 12%, you'll get all 12. If the S&P goes up 15%, you'll only get 12. But if the S&P is down 30%, the worst case scenario is you're getting a zero. So when we did this illustration here, these are the numbers that we've seen, dramatically different. You can see that we're at about 270,000 thereabouts. Here we're at about 144. It's a staggering difference, but the nice thing is the numbers are much higher, which is always great, but usually risk comes along with that reward. In this case, we had higher gains, higher rewards, but we eliminated the downside. We eliminated the risk. So let's say in this case, you chose a 15% cap. If the stock market had a 23.5% gain, you would have received 100% of the gains up to 15%. So you would have received 15%. When the stock market goes down 38.5, you get a zero. That's what we call zero becomes our hero. This is one of the most powerful techniques used with this specific financial vehicle used by the wealthy. The three controlling factors vary and are developed from the financial institutions who offer them. And to learn more, just go ahead and leave a message. You can go visit our website and open up a free video account so you can start to get educated on all the strategies, how to have your money grow tax deferred, and actually have the money come out tax free. So can you imagine having the upside, having the reward, eliminating the downside risk, the headaches, and then having your money grow tax deferred, meaning that we're delaying the tax, and then by employing a simple strategy that we've been doing for over 100 years. This country's been doing well over 100 years, and in my firm for over 25 years, we show people how to safely take the money out tax-free to create a tax-free pension. Now think about it, everyone. Are pensions going higher in corporations? The government's talking about Social Security and Medicare. Do you think Social Security will be available? Will it be different? It's already being delayed quite a bit. So I'm advising people, business owners, families to start creating your own pension. And again, do you want to defer your dollars into the future? And I said this in video number 1. It's worth repeating. A 401k, an IRA, is a tax deferred plan. What's a definition for deferred? Delay, postpone. You're delaying it or postponing it into the future to a tax bracket that is unknown. So we're talking about taxes. We want to reduce tax exposure to an entity that may choose that the taxes may be higher in the future. But now, what about the stock market fluctuations, right? We talked about longevity. We talked about retirees. The biggest fear is outliving one's money. We want to make sure that that income lasts a lifetime and beyond. And any money that's left over when we do eventually pass away, that a legacy is provided for our loved ones in a tax-free method. Okay, so that is it for the ebook. If you haven't already, Subscribe. I encourage you, if you like this information, you like these types of videos, give a thumbs up, give us a positive comment, subscribe, hit the notification bell. The fourth video is coming up. It's going to be prepare for the unexpected. We're going to look to do that possibly tomorrow or the next day. We're going to see what the schedule looks like. And then you can see the fourth and the fifth video for this wonderful ebook. And you can visit us at freedomwealthservices.com and contact us here. So you can click Wealth Strategies. For this purpose, you can click Video Lessons, and you'll see Welcome to the Educational Video Series, and you're going to see my team members give some great videos. We're going to go over things like introduction of wealth strategies, 3 types of money, traditional way of doing things. These are short videos, but really concise, really informational. There's no obligation to do business. We want to educate people. Now, if you find that you need some help or you have some questions and you'd like to work with us and talk to us, just reach out to us. We're here to help. We've been serving the country for 25 years, and our specialty is helping people save money, avoid the mistakes, increase cash flow, create a tax-free pension for life. So again, everyone, this is Bill Constain, CEO of Freedom Wealth Services. I hope you enjoyed the video. If you loved it, pass it forward, share it with some friends, share the channel forward, and come back for video number 4 as we will continue on this series. Okay, everyone, have a great day, and we'll see you tomorrow. Bye for now.